Welcome back to a market open live stream and, of course, jobs data release. Jobs data comes out, I don't know, in like less than 40 seconds here. So we got to fly on this. Remember, the goal is we want to see somewhere around the expectation, I would say, currently is 660,000 for jobs data. And well, we're gonna see. Are we gonna beat? Are we gonna gain? It's gonna have some massive implications. We talked about the implications in yesterday's video. What could happen if we get a miss or a beat? Let's go ahead and get ready here for jobs data. I've got CNBC up as well, so we'll see who gets it first. Bureau of Labor Statistics is going to be getting us to us. And all right, it is 5:30. So let's see what we got. Unemployment situation. Oh, June 4th, it's already out. Oh my gosh, it's so fast. 559. Okay, that is a miss. This is not as bad as I thought it was going to be. I thought it would come in a little lower. Let me go ahead and put this into notes really quickly here. But we have it, and then we can highlight it here. So 559. Come on, BLS. Let's go. There we go. All right, we got it. All right, so it came in at 559. It is a miss from expectations. However, the unemployment rate did decline with these expectations to 5.8%. We have, all right, let's see, household data. Unemployment rate declined by 0.3%, and unemployed persons fell by 496 million. These measures are down considerably from their previous highs, but remain well above their levels prior to the coronavirus, of course. All right, here we go. These are by race right here. Hispanics have an unemployment rate of 7.3%, whites at 5.1%, 5.9% for adult males, 9.1% for blacks. I want to say that's up that's up like a couple percentage points. Like tenths of points from last month. Among the unemployed, a temporary layoff declined in May. The number of persons jobless less than 5 weeks declined by 391. Okay, good. We want to get workforce participation. Here we go. Little change, came in at 61.6. I want to say that's right along expectations, 61.6. The participation rate is 1.7% lower than February of 2020. Number of person employed part-time for economic reasons was essentially unchanged at 5.3 million. We've got people not in the workforce came in at 6.6. So, I mean, overall, this is obviously way better. It's still a little bit of a miss from the expectations of around 660. It's certainly good, though, having 559 as the result. We have among those not in labor. Okay, hold on. We want to let's get to some of the household data here. Let's see. In May, 16.6% of unemployed people teleworked. This is actually down quite a bit. So you could see people are going back to work right here. We thought this might stay. I remember when the pandemic first hit, we thought, oh, maybe we'll be around around 20%, somewhere around the what's it called? After the pandemic, but it's already back down to 16.6%. So 16.6% commuting. We've got, let's see here, 7.9 million unable to work because their business closed or some other aspect. Not in the labor force, came in at 2.5 million. Survey, let's see. Okay, what else do we have here? Okay, here we go. The individual sectors. So leisure and hospitality up by 292,000. So this is like hotels and restaurants. In fact, look at this. 2/3 of the leisure and hospitality were in food service and drinking places. Employment and amusement, gambling, recreation also went up. Accommodation only 35,000 here. That would be like hotels and that. We've got 53,000 of an increase in local government education, 50,000 in state government education, and 41,000 in private education. But employment is down from February 2020 levels. So an increase here, still down obviously though. Healthcare, social assistance, 46,000 jobs. Employment and information rose 29K, manufacturing 23K, transportation 23K. These are relatively small numbers here. Construction edged down in May, reflecting a job loss in non-residential specialty trade contractors. So that's a particular like non-residential would be certain either government construction or some sort of commercial construction for business. Employment in professional business services changed 35,000. Retail trade, that's interesting. Employment in retail trade, negative 6,000. I'll put this as, I'll put that at pink right here. That's interesting, or purplish. Clothing and clothing accessories added 11,000 jobs. So where would they lose? Employment in food and beverage stores, like Bevmo. So this would be like grocery stores, 26,000. And it's been declining, following a decline of 47,000 in April. That's interesting. So otherwise, retail seemed like it did add. In May, all right, let's see. Little change in other industries. Average hourly earnings for all employees on non-farm payroll increased by 15 cents to $30.33 in May, following an increase of 21 cents in April. The data for the last 2 months suggests the rising demand for labor associated with the recovery from the pandemic may have put upward pressure on wages. So a tiny little bit of an upward pressure on wages being reflected here. Through which makes sense because it's hard to find employees right now. However, because average hourly earnings vary widely across industries, the large employment fluctuations since Feb 2020 complicate the analysis. Yep, would agree with that. Average work week for all employees was 34.9 hours. Manufacturing, we were up to 40.5, and overtime increased by 0.1. All right. So this is a pretty middle of the road report. Yesterday, when we did our analysis on what we thought would happen, I mentioned that really anything plus or minus 100,000 would really be along expectations, and that we might see like a minor fluctuation in what happens in the stock market. Maybe you see a little bit of an up or a little bit of a down in the S&P. This was the video I posted yesterday that said watch before Friday morning, and the expectation was 660,000 jobs. And I really thought anything plus or minus 100, which does roughly encompass 559, since that's about 650 is about 100K the other way, or 560, which is pretty much where we are. I didn't expect that we would see any major changes, and that's kind of what I'm expecting to see here when I go ahead and, oh, they changed this. Oh, that's interesting. Who can send messages? Subscribers or members or anyone. Now, we usually do members, but now you can make it so you have to subscribe. Ooh, that's juicy. All right. Anyway, so let's go ahead and take a peek and see what's happening at the sticks. All right. So hopping on in. Let's see what we got. We've got AMC moving. This is roughly what it moved last night. So not really any movement here. Down about 7% on AMC here. It's about $47. We've got about an hour. We got about an hour before market actually opens. So we'll see how AMC develops here today. Yeah, 7.6 million new jobs. Yeah, that's an interesting note here. 7.6 million jobs short of where we were in February of 2020. That's 600,000 a month. It would take over a year to get back to where we were last time. Yeah, about 12 and a bit. All right. So, all right, what else do we have here? Costs, workhorse. Some of the big gainers are giving up a little bit today. We'll see. At least that's pre-market. Oh man, it's too early. DocuSign up 6.69%. Yeah, this was after great earnings yesterday. Build-A-Bear 5.15%. Here's a momentum play that has a very low market cap that has been flying. I mean, this is pretty much a double over the last month or so here. Really, really nice. It's crazy though. I mean, super low market cap, so very can be very volatile. Churchill Capital 366, Arrival 357, Shift 296 to the upside, Matterport 244 to the upside. So we got the jobs data out of the way. let's see here. Now I'm going to do market open. All right. Yeah. Okay. There we go. Okay. So, perfect. All right. Let's take a listen into see what CNBC has to say about our jobs data here.
Increase in employment. The state level data will come. We'll get it in the unemployment claims data on the weekly basis, and then a little bit later. I think the 25 states that are getting rid of the unemployment benefits is happening in June, so it may not be a May effect unless some people went a little early. But we'll get the state level data in the weeks ahead and in the months ahead to see what kind of effect this has.
Rick, would that be something that could potentially impact your guests next month, the month after, or do you think that this is something that lasts until after Labor Day?
I think that it will make a positive difference, of course, but I do think that the big differences will show up after September. And I think you made a great point, Becky. Transience is not a word that I would necessarily associate with wages. And I do think that the postmortem on everything COVID, we're going to find that the policymakers, especially our central bank, really underestimated the vibrancy of the comeback. And I'm surprised that they haven't taken that kind of wrong-headed thought that, it's going to take long, it's going to be bumpy. It's aggressive and it's happening faster. And I think they need to make adjustments. I do think taper talk is a lot closer than they're hinting. And I don't think that's a bad thing. I think that's a terrific thing.
Yeah, Austin, there is no playbook for this. Every recession looks different, but this one in particular, because of the nature of what caused it and how quickly things happened and how quickly maybe they're being undone.
Yeah, that's totally right. And what sectors? I mean, most of the sectors that led this decline were, we thought, recession-proof, healthcare and services and a bunch of things that dominated the economy that are not cyclical. Now, that said, wages going up is not bad. Wages going up is good. We've been trying to get wages to go up for a long time. So if we could...
He's not wrong about that. I mean, a lot of people are like, wait a minute, isn't wages going up going to lead to a lot of inflation? Not necessarily.
Great. That's what we've been wanting.
Yeah, well, we were getting that.
Especially if inflation doesn't.
We were getting that before the pandemic.
Oh, no, Joe is back.
No, Austin.
Hey, Austin,
we don't want that to happen, Austin.
Please hold on, Steve. Please, I want to ask Austin, if I send you a box of donuts, we got a bunch of them here. If I send you a box, am I off the hook?
Chipotle, but I'm going to order every single thing on the Chipotle menu, and it's going to be on you, Joe.
I'll bring you to Rosa Mexicana, and we will have cocktails. That's even better. But get your butt back here. You keep complaining, but you haven't been back here. You love that. You love that. The pandemic gave you...
Okay, they're being weird. So let's just go ahead and pull on over here. And let's take a peek at, for example, AMC. All right, so AMC is, it's going to be interesting today. I want to go ahead and look at some of the lines we have, because right now we're playing in between them. These are some of the lines that we've set up that have tested pretty well for us as we've been watching. We've seen some pretty incredible bounces right off the line, some breakthroughs. We've seen bounces off the bottom. We've we're gonna have an interesting day today. It is the last day of the week. We did have plenty of share raising happening over this week, but we're excited to see what our price action is today on AMC. We've got Workhorse, also same thing. Coinbase just cannot move out of the 230 range. It's pretty incredible. Very, very, very stuck here. We'll also take a peek and see what's happening with crypto. If you haven't seen Elon Musk's tweet yet, another Elon Musk tweet, I guess that's all you really need to know. So there's another Elon Musk tweet. But anyway, you've got Doge sitting at about 36.3 right now. Really fell down from its run up to about 42 here. Get to about, I got to about 43, 44 just 2 days ago, and almost down a full 10 cents here again. Ethereum sitting at about 26.26 and Bitcoin 36.6. Let's go back to the last 30 minutes here. You can kind of see this would be roughly your Elon Musk sell-off reaction here. It's pretty incredible. Must be interesting to send a tweet and have massive impacts to the crypto market. I feel like at this point, people are in crypto are like, Elon, just go away. Just go away. All right, let's listen in here.
Is also what happens in terms of overheating in different parts of the economy. For example, we know that supply chain disruptions are also having a significant impact on inflation and an impact on how companies are thinking about future capex in order to mitigate some of these risks. And so there's a lot of moving parts as we think about profitability going into 2022. So it's not just higher wages, it's also supply chain constraints. And I'm also very focused on what happens in terms of the Fed's reaction function and if we end up getting tapering sooner rather than later. Thematically, I think this means you continue to lean into equities that are still the most attractive asset class in my view, but you need to be a little bit more selective. Up in quality is really critically important. You want companies that have sustained and sustainable earnings growth.
Kate, is that a good thing or a bad thing?
That's going to be a big thing for just the market broadly as we get some green sticks here over at AMC. Big thing, I think, for the market. Oh, yeah, here we go. Is this going to run? Look at this. Look at this movement here on AMC. We're just starting to get a little bit of a movement up here. It makes me wonder if you've got traders waking up, people waking up going, Kevin, what was the unemployment jobs number? Okay, slight miss. Okay, got it. I'm going to go buy AMC. It's kind of fun. So we'll watch this. But yeah, we are getting a bit of a green candle here. But anywho, as the person who was just talking mentioned, earnings. It's a lot of this, a lot of our future growth potential here is set in earnings. And I have to say, by Q2, Q3 of this year, which we'll start having that data in October. This is why I keep saying September, October for a rebound in a lot of the stocks that have sold off. Those earnings, I think those earnings are going to provide for us. We'll see. But I'm expecting company margins to be much higher than they have been across the board, really. A lot of companies have gotten very efficient through this pandemic, or they've just disappeared. But the ones who've survived have gotten pretty dang efficient. So we'll see. Yeah, still getting some green movement here. We're on the 1 minute stick here, bobbing around between 4.5% to 5% towards the downside. See what kind of hodl run we get here. We've got a few options contracts to deal with today. Actually, one option contract to deal with today, a set. And the other one we've got another few weeks on. So we'll see what happens. It'll be fun. Gonna get assigned some shares unless AMC is over 73 today. I'll get assigned at roughly a cost of $49 a share, which is right about where the thing is trading right now. So we'll see how the day goes. But yeah, let's see what else. I mean, so far pre-market relatively quiet. We do know that Sens had some approval on its, well, not approval, but a very positive study on its diabetes drug, which is very good. Go ahead and put them on the main list. There we go. There we go. So we'll keep an eye on Sense there. That'll make the market feel a little better. Or the chart feel a little better. Keep in mind, though, it gained most of its 30% in the first, 4 minutes of the news yesterday. And after that, you haven't really seen it move much. So we'll see. All right, let's go ahead and listen in a little more.
At some point, yeah, I think that when we get back to full employment, when we have all of the cylinders of the economy operating, that's when I'd start to worry if we really saw inflation. I don't remember a report I did a couple of weeks ago, Becky. You have airline fares. They were up 10% in April. But yeah, remember, they remain substantially below where they were a year ago. So there's still a lot of noise that's going on in the data. I think the Fed is going to be reducing its accommodation over time. I don't think that they're going to take Kate's advice. With all due respect, she gives wonderful advice. I don't think they're ripping the Band-Aid off here. Powell has been very clear that they're going to be very measured in how they do this. I would expect them to begin talking about tapering this summer, make some kind of announcement about their plans to taper either later this year or early next year. I think that's the way they're going to do it. I think they should have done it a long time ago, but I'm not the guy making policy here. That said, I think there are going to be substantial increases in inflation in the next couple months. But talk to me in September when we have perhaps all of the cylinders of the economy operating, supply and demand are back in balance, as to whether or not we have a real inflation problem.
Yep,
Steve,
bingo.
Rick, Austin, Kate, want to thank you guys for your time.
I mean, he's not wrong. I mean, that's literally, we've been saying this since February, and I feel like a broken record or like beating a dead horse, but regularly, if you've got stocks that are down, you're looking at your portfolio and they're like, man, this is down. It's just not doing well, or it's been like 3 months and it's been down. What if more inflation comes and the stocks just keep going down? Folks, September, October. That's when I really think the market's going to start pricing in the real economy that we're going to be in, which I expect to be a very strong economy, one where supply chain issues get repaired, not immediately, but over the next year, and the market will start pricing that in pretty quickly. We do have a little bit of a red candle here in the pre-market on AMC. So a little bit of a bounce here off of about that 49 level, bouncing down about 5.92, about down 6% right now. Got Workhorse about down 5%. Some massive gainers. Well, Workhorse a massive gainer yesterday, AMC the day before. Big old share raise at AMC yesterday, but really only about 2%. And management seems pretty transparent about being making sure the company is using all of its funds to the best purposes of the company. The CEO is really, really convincing. Really great guy to listen to. So what else do we have? We've got, Sen's sitting about 30, DocuSign 6.8, and we are waiting for the opening in about 39 minutes. The strategy here is really, we want to see, obviously, I mean, the doors open up if you end up with a nice run here, because it'd be nice to be able to sell, or to rather not to sell, to close out the put contract, maybe at a little bit of a profit. And remember, it is a sold put, which is bullish. When you sell a put, you are selling something to somebody who's bearish. And so we're going to be buying about $52,000 worth of shares at an effective price of 49, unless we get a run, and then we might be able to lower that 49 to like 48 or 47 or something like that in a run. We could do that. So, for example, if this thing runs up to $65 today, we'll be able to close out the contract, and we'll get straight into shares. We also have a call for a couple, about 14 days, a couple weeks from now. So obviously calls move pretty dang fast to the up or downside. So very, very risky, but very good. We'll see what happens. All right. Let's see what else we have here. Let's give a little bit of what do we got here? Breaking news. Let's listen in.
Welcome back to Squawk Box on CNBC. The government's May jobs report showing an increase of 559,000 non-farm payrolls. Right now, you can see the futures are viewing it as a pretty friendly number, at least a little. We're in the green, up about 90 points on the Dow. NASDAQ up 61 or so. Join us now for some market reaction and analysis. Sarah Malik, Chief Investment Officer for Nuveen's $420 billion global equity division, and Surat Sethi, Managing Partner and Portfolio Manager at DCLA. He's also a CNBC contributor. So, Sarah, you got that 420 split right down the middle, AMC, GameStop, and then cryptocurrencies. Is that where you're with a few NFTs thrown in? Maybe that's not where you're playing right now.
A third, and some SPACs. Actually, today's payroll report is just another piece in the puzzle of where we are in the economic cycle. And our view is that it eases the pressure on the three key factors that are impacting the markets right now. That's inflation, taper talk, and peak earnings growth. We're in the transitory camp when it comes to inflation. With taper talk, we think that today's number actually keeps us further away from where the targets for pricing and also employment. And then speaking of our portfolios, what are we talking to our clients about? peak earnings growth likely happens in the second quarter. Our view is own those companies that have a lot of macro tailwinds in sectors such as industrials and financials, but also have the support of strong balance sheets and returning cash to shareholders. So these are dividend growers. So you can basically play offense while also getting defense in your portfolio.
So you indirectly answered, I guess, what I was getting at, and that is that these other things can occur.
All right, let's pull off this here. Let's go into here. Yeah, I would say probably, I'm just reading some of the comments here. I'd probably say about 40% of us don't believe that. No, hold on. You know what we should do? Let's run a new poll, because it's been a while since we've run a poll on this about inflation. Let's run a poll and say, do you believe that inflation is transitory? Higher inflation will be here for, I'll say, gone, or let's do this. Inflation will be back to or under 2.5% by mid-2022, or not transitory, over 2.5% inflation for the next few years / beyond. All right, let's see what y'all think. So this, I'm gonna ask this on Twitter. Go to your Twitter and vote in this. Let's see what y'all think. Transitory, under transitory, under 2.5 by mid 2022 by 22. High for years. All right. Well, I should do over 2.5 for years. Okay. See, let's see what we use. Should I use 2%? Well, they're doing flexible average inflation targeting, so I'm going to go with 2.5%, because basically the reason you go with 2% or 2.5% is because even if it sits at 2.5%, we're not expecting to see rate increases right away, just because they want to let inflation sit a little bit high so they can average to 2%. So 2.5% is really seen as the threshold number for that. All right. So, all right, 4.69 sitting around here on AMC. CEO did mention that could be as many as 25 million new shares authorized or issued rather in the future here. We do think that'll come. I don't know that that'll all happen at the same time though. So hopefully they give the ape army a little bit of time to push the stock a little bit, because if on one hand, if you're trying to do a short squeeze, and on the other hand, the company keeps issuing, it kind of makes it a little difficult. Twitter handle is @RealMeatKevin. @RealMeatKevin. But yeah, it gets a little difficult to squeeze AMC if they keep getting new shares out there. So hopefully they spread that out a little bit. They keep we got the shareholder vote. This is true. It is subject to the shareholder vote. So it's not coming anytime soon. But over the next few months, it'll be interesting to see. Because really, I mean, if you think about it, they plowed 20 million shares out over the last week. You know, that's a lot. So, all right, what else do we have here? We've got Sens at 30.7% to the upside. DocuSign 6.7%. Churchill we've got at 4.3. Ooh, Churchill's got a little bit of a run here. Very nice. XL Fleet 4.36. Nice. Tilray 4.16. Sundial 3.88. Shift 3.77. Build-A-Bear softening a little bit here. Here's ChargePoint. ChargePoint had decent earnings yesterday as well. Yeah, a little volatile, a little all over the place here. Jacob, isn't it? I believe it was issued but not sold before Q4 2022. Let me see. Pretty sure they could issue those. Let's see here. I can pull it up. I'll find it. let's see. But yeah, I'm pretty sure that was what. I'll find it. We'll go ahead and get the detail on that. Yeah, exactly. If it's allowed. Job numbers. Yeah, let's go ahead and pull off this for a moment here. If the vote, no, of course, the vote has to go through first. No, we know that. But I'm pretty sure it was issued and not sold. So you'd still have dilution is basically what it is, but you wouldn't be flooding the market. But dilution gets priced in is why it matters. Yeah, here we go. The company, if approved, the company would not be allowed to sell any of that stock until 2022. So in other words, they could issue it, they could dilute the stock because issuing will dilute the stock, but they can't sell. Can't sell until in 2022. So AMC sitting at 4.4 right now. And yes, said a few times now, the vote still has to get done first. All right, that's why they're going for the vote. So anyway, we're living in a clown market when people are happy for bad economic data. This is so unstable. Well, I made a video explaining this in detail yesterday, that really you're looking for this sort of mid-range movement. Let me see if I have it up. Yeah. See, this is what we drew yesterday. Take a peek here. We drew this yesterday. And what you have is you have this kind of market where if we overheat and data comes in too strong, then you have fears of hyperinflation. You have fears that the Fed's going to lose control. Then you have a strong, like a strong economy is seen as good, but not an overheating economy. And then a weak or underheating economy is also seen as bad, because this would be like a Europe or sort of Japan situation, right? So this is generally seen as not so good. You don't want to be underwhelming. You want to be overheating, and you don't want to be overheating. You want to be in the sort of middle range here. This is pretty important. All right, let's go ahead and take a look at this. They're talking about Elon's tweet here on Fox. Let's see here. I can explain it in a moment.
Is there? We'll be looking for any other celebrity headline that moves the market. Bitcoin 36.9 as we.
Yes. Again, they can issue new shares via vote. About 25 million more shares. Issue, but not sell. But issue creates dilution. And sell changes liquidity. And this is why when you saw because people are asking, like, Kevin, why would AMC, for example, go down 18% when we only had 2% dilution? Well, it's because you have much more liquidity, which eliminates the impact of a gamma squeeze or short squeeze, because you have more of this liquidity. Less gamma squeeze, less FOMO buying pressure, and more shares available, which puts less pressure on the short squeeze. So issuing shares doesn't do that. Selling shares does that. Issuing shares just creates dilution, which does get priced in. And another 25 million is about a 5% dilution. So it's not that bad. Like the dilution is not a big deal at all. Relative, I think, to the long run of AMC, another 5%, and it puts them in a position where they can eliminate a substantial portion of their leftover debt. At the end of March, they were sitting at around 11 billion in debt. Now they're somewhere around like 5.5 billion in debt, and they keep raising more and more money. I think Adam's doing it right. I think he's doing a very good job. We'll see what happens here, though. Again, with 2% dilution yesterday, but why would you have a 20% decline in the stock? Because it changes liquidity. It's a big shift in liquidity for the stock. Big shift in liquidity removes some of that gamma squeeze pressure on the stock itself. So we are rising a bit here in the pre-market for AMC. It looks like we're sitting right around 3.48% to the upside. All right. Sitting at about, I'm sorry, 3.7% to the downside, but we are beginning to rotate to the upside. We've got Workhorse down 4.5% after a 28% run yesterday, bobbing around. Not a lot of movement here. The big thing to look at is really just going to be the short interest and watching to see what happens with short interest at both AMC and Workhorse. No dilution until well after we make these hedges pay. Yeah, well, that's entirely possible. I mean, you've got a few weeks before the proxy vote anyway. And even if you authorize the dilution, I don't think it's going to have too terribly much of an impact because you're not going to see those sales in the market. Sen's moving a little bit. Finally here, it did run up to about 30%, sat at 30% for quite a bit of time here, and has now ticked up another 3 percentage points. DocuSign up about another 3 percentage point as well, maybe 2 percentage points from what we noticed this morning, which was about 5% to the upside. Churchill Capital also moving a bit, still sitting below $23 though. We've got, yeah, we could pull up Ortex. Give me a second. I've got that as well. And we do also have, we can get the S3 as well, S3 data. So we'll pull up both here. All right. We'll just give it a second here. We'll pull this up. In the meantime, we can listen to CNBC just for a moment here. Let's listen in.
In terms of jobs added for the month of May.
Well, that's right. And I think what this report really says is we've got a labor supply problem. I think it's a temporary one. But to me, the number that jumped out of this report is that the labor force actually fell by 53,000. Now, normally when you've got a recovering economy, when you're coming out of a pandemic, you would expect to see the labor force rise. So what's happening, I think, is a lot of people, because of lingering pandemic concerns, perhaps, but also because of unemployment benefits, aren't coming back into the labor market. And that is causing wages to go up. I mean, what we look at is actually year over the last 2 years. So we try and take out the extraordinary distortions from a year ago. But over the last 2 years, the average hourly earnings of all workers have gone up by 8.8%. So that's 4.4% annualized. And that's about...
we did cover this. Let's go ahead and pull down here. Yeah, $40 billion SPAC valuation on Bill Ackman's SPAC. I do wonder how it's moving, PSTH. Remember, PSTH was really this SPAC that folks were buying into for quite a while, waiting for a massive, massive deal. And now the deal's announced, and you've got a classic buy the rumor, sell the news here, down 9.6% in the pre-market. And I want to say this is a, gosh, this was a $20 par, wasn't it? I believe, I'm not sure. I have to see. I want to say this was a $20, but maybe if it was 10, that's obviously different. We'll get to the bottom of that. We'll also pull up that short interest data. Let me go ahead and see really quick here. All right, so we got about 23 minutes to the open. I'm going to pull up the S3 short interest data, and then we can also pull up the Ortex. So give that just a second here. Oh, and let's see how our vote went on Twitter. So to all of those of you who voted about inflation, my guess was 40% of you thought that inflation would not be transitory, but we did decide to run the poll. Look at that. 44% of you. I mean, this is pretty split. This is almost a 50-50 split. That's interesting. 44.5% of you I think that inflation will be over 2.5% for years to come. And 55% of you think that by mid-2022 will be under 2.5% again. Very, 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 very interesting. All right, let me get into Ortex here. Yeah, remember Bill Ackman was the he was the guy. It is $20. It's a $20 par value. So $20 is your base for the Pershing Square instead of $10. Oh, jeez. Oh, yeah. All right, let's see here. Let's just get the short interest out of here. This is Ortex. So let me remove some of the items here. So we've got, according to the estimate here, let's open this up a little bit more. Come on. There we go. Okay, so currently showing at estimated short interest as a percentage of free float. Last was 17.46 with a previous of 16.7. So down, it's falling slightly. I'm going to go ahead and look at the Black app here and see if we can get the S3 partners data as well. Takes a minute to pull it up. We'll pull up that new short interest data. But we have seen it kind of slowly tick down. We haven't seen a massive drop in the short interest data, though. You know, we've really gone from about 20.8% to about 18.9 to maybe 18.3 or 18.03, I believe was yesterday. If I throw in AMC on the S3 Partners data tool right now, yeah, we're at 17.65% on that measure. So we are seeing the short interest rotate down a tiny little bit. I'll show you here. Give me one sec. I think I could just do, I think this qualifies as being okay because it's a different app. Some things I can show on that and some things I can't, but I think this is acceptable. This is an exportable. So anyway, yeah, so this is the short interest as a percentage of float on AMC. You could really see the movement. I mean, look, the movement for AMC began obviously back in January, but since the movement really gained steam in about mid-May here, we've really seen a pressure on AMC, pump the stock right up. And we are starting to see short interest go down a little, but I wouldn't call this the squeeze yet. You know, this is nominal. This is nominal covering here. So let's jump on into the sticks. I see some of you commenting that AMC just went green compared to Bill Ackman's sitting at 954. 954 to the downside. That used to be my area code. That's crazy. Redfin's up 4. Let's go ahead and pull AMC here. AMC, where are you? Tesla's actually green today. Oh my goodness. Where the heck is this? Where's AMC? Just type it in. There it is. It must. Oh, look at it. It's playing our line. Folks, you can't make this up. You can't make this up. It literally plays our lines. But folks, this might set up for a breakthrough here. And if we break out of this line here, that's good because we want to get away from the 41 area. We want to break out. This could be our first full candlestick breaking out over here. Let's go. This is what we want. Folks, I got big dollars on this, and I don't need another buy the dip video getting created about me going, I just lost lots of money. Let's listen in here for a moment.
Their debt load. I mean, they've already raised, I think, what is it, almost $3 billion at this point since, this all began. They still have, I think, what's around $4 billion of net debt. Remember, you got to take out cash. But in 5 years' time or less, they got a lot of debt coming due at the company. And don't forget, of course.
Yeah, I'm just going to clarify this to the folks joining. Yes, no sale of shares until 2022. But you'll have the dilution if it gets voter approved before 2022. But we're only expecting about a 5% dilution, 25 million shares. It's roughly about a 5%, slightly below a 5% dilution. And so that's good because what you don't want right now, especially as we're looking for that squeeze, is all this new liquidity coming in.
What I'm hearing, they're entirely out, Mudrick. They don't own any stock, which they didn't own for very long. But more importantly, where they really were playing and created a lot of value for their fund holders were the debt securities. They were the first one to really, this first lien debt where they...
Ross Gerber's in those a lot.
Coupon. Now they're out entirely at Mudrick. So they're no longer part of this.
Would 80% of the shareholders vote yes? Look, I actually think the 25 million share sale with no sale until 2022, basically diamond handing those shares, but issuing them, I don't think it's a horrible long-term move. I actually think it's the perfect way to do it. They don't flood the market with liquidity. It eventually will raise them the capital. I mean, look, they could totally be a jerk and just issue the 25 sooner, obviously subject to vote, and then dump them and sell them, right? And you probably get votes to do it. But the fact that none of them are going to be sold until 22, it's actually very, very good. Again, the squeeze we're seeing in AMC is about liquidity. It's all of us buying, diamond handing, buying the calls, gamma squeeze because of delta hedging. It's all of this. The shorts covering. It's all of it. Although the shorts have barely started covering. I wouldn't even call this the squeeze yet because you've gone from what, like 21% we saw to here. I'll pull up the number again so we have it handy here. Look, short interest. Oh, oops, wrong button. Here you go. 16 or 17.65% short interest, down from a high of about 22.5. So we've had about a 5% movement here, in or 5 percentage point movement in short interest.
Don't rely on this current stock price to be anything near where it is. Yeah, it does not allow itself to be subjected to traditional securities analysis, I think is fair to say. If you want to share that, I mean,
shrinkflation is actually a very important thing, and you're correct. That is a very valuable point to pay attention to. This is, well, as you've described. I think you've described it well here. AMC, by the way, down about 2.5 right now. Keeping an eye on this. Yeah, shrinkflation actually makes companies very profitable. It is a wonderful way for companies to profit more. It is not a good way for people to be able to survive and have a lower cost of living. Eventually, the CPI does correct to make changes to that, because the CPI is trying to acquire a similar product every time they do their measure, and and quantities do get adjusted, so they will get the proper quantities to make sure that CPI remains at least a relatively appropriate reading. Look, most people don't believe the CPI as far as you can throw it. And since you can't really throw it because it's inanimate, you can't really, most people don't really believe it at all. But I will tell you, I want to go back to our tweet here, our poll. Yeah, we've got our Ortex here. Yeah, look at this. You've got 1,384 of you have voted on this. And we're about a 50-50 split here on inflation. 44% of y'all thinking inflation will be over 2.5% for years to come, but did not select under 2.5% by mid-22, which is 1 year from now. That's actually weird to say, honestly. That I'll tell you, this right here it's weird, but it is very bizarre to say that in a year we're already at mid-2022. Man, what happened? I feel like COVID just like destroyed us or like robbed us of it feels like a little more than a year. But anyway, this is quite scary again here. Texas James. Well, hey, you know what? I appreciate you saying it. Texas James here says, stand corrected. I used to think TA was fake. It's over and over again on these. And you see this more on the momentum plays than you do on something that's not as much of a momentum play, like a Tesla. Tesla TA is going to be usually a little softer than something like on AMC here. But it's scary. It's like we get the little peak over the line here, and then no, bouncing. This is essentially a bounce off the line here. And we've had this line drawn for I think this is day 3 of this line here. And what you're really looking for is a full bar breakout above, but we're bouncing right off again. Hopefully we continue to try to test this here. We want to break out above this 51 line. It's so important. We want to break out above that. Otherwise, we're visiting this 41 again. But then again, keep in mind, yesterday we visited 41, and we immediately we started running after we visited 41. We went to about 40, 39. We broke through a tiny little bit. U-turns, gets back in the box, and had such momentum that it flew right above the box. It was up like 8 or 9% there yesterday, intraday. Move the magic line up. No, then it loses respect. The line has to come naturally. You got to respect the line.
May not happen. I'm referring here to Pershing Square Tontine Holdings, PSTH. Yeah. Remember, of course,
Bill
the largest
Ackman, man.
SPAC that was
Down 10% right now here on the announcement. This is not sexy enough, the company they're going for, Universal Music. I hate to say it, okay? Look, I think, and I'm sure Universal Music has great fundamentals and all this. I don't know. I haven't looked into it. But look, I'll tell you, yeah, see, 10% for $4 billion. That's a $40 billion valuation. It's a whole heck of a lot of money. But let me tell you this. If he came out and he's like, let's go, we're doing an EV play. Oh, that would have been really good, I think, for the EV sector. But so far we haven't seen that. All right, so we're rotating again to the downside here on AMC, about 4.17%. Remember that if the shares get approved, we're talking a 5% dilution, but not a liquidity issue because the shares can't be sold until 2022. Right now on AMC, we are bobbing around this $50 line. We essentially just bounced off of it. We didn't have a full break above it. Got close, but didn't get it. Look, the first few minutes here could be rough. Oh, Stripe. Stripe would have been a juicy target. Yeah, about $100 million valuation in the private markets roughly right now. Mudrick Capital dumped their debt in AMC, it looks like. No longer debt or equity. They're just completely out. Yeah, because they were some of the first to give, what's it called? Loans to AMC and really bailed them out during the rough of it. Ugh. Oh, yeah. All right, what else do we have here? All right, so we have AMC sitting around down 2.5 right now. See if we get a run here on the short squeeze. This top line, you'd really have to go back probably 3 live streams, 3 or 4. No, not 3 or 4 days. But usually we draw these lines as supports when we get them. We are moving back to the support right now. We're actually presently our resistance level. We previously drew it as a support when we were bouncing off of it above, but supports can become resistance. But the lines become important psychological points, whether you're above or below them. And obviously, if you're below them, they're resistances. They're like ceilings, or they're like rubber bands that can pull you back. In my opinion, I look at resistance levels as something because they're not always 100% solid. I think of them as sort of permeable. But if you don't get a full break above them, you tend to rubber band back into them. And it also depends on the kind of momentum that you have when you go through that layer. I mean, you could have complete breakthroughs through these lines, and those can be very bullish indicators, and those can lead you to run to the next level or to a new level. So we'll see right now AMC sitting at about 2.5%. Magic lines, make a t-shirt. Yeah, we got to make some new t-shirts. We do have Sens sitting at about 33%, DocuSign 7%, Ashford Hospitality 6.4%, Naked ChargePoint Shift 3.5%, Bumble 2.6%, Ride, Roblox almost at $100 here. Tesla 1.47%. All right, let's see how this moves here. Workhorse sitting 2.64%. Let's go ahead and see how things evolve here. All right. All right. So we are waiting. Oh, sorry, that's Workhorse. Let's go back to it. Where's A? There we go. There we go. AMC's moving a little bit here. We're running right back towards that line. Let's stay on this right here. Headed on Workhorse there for a brief moment. Workhorse, remember, 47. Hold on. Let me get the new update on Workhorse here. 47% on. Oops. Oh, well. 49.66. It went up. Oh my gosh. The short interest went up again on Workhorse. No freaking way. 49 points. It's basically 50% short right now. Workhorse right now is essentially it's one of, if not the most shorted stocks right now in the market. That's crazy. 49.99% short. Ooh, it's juicy. We'll see what happens. But to me, and not at all trying to take away from AMC. You know, this is just sort of like I call it a sideshow. And I always think you should have sideshows going around, just for the sake of some diversity. But, again, not trying to rob anything from AMC. Love my AMC position. Right now, as long as it's over 49, I'm positive on the deal. So we'll see what happens here. But all right, let's see what else we have here. Okay. And okay. What else? All right, here we go. And there we go. Okay. So 1 point. We're running back to the line. Let's see it. Come on, y'all. We want to see it. We're moving back. Come on. I want to see the breakout. The problem with AMC, and it's not really a big problem, but it's something to keep in mind. One of the things with AMC, folks, is the darn thing right at open tends to drop. At open, it falls. But then you see it push. But it takes like 5 minutes. So you gotta be really watchful on that. And no guarantees that's what's going to happen. It's just consistently kind of what has been happening. New member, deep in CCIV, new investor learning. Do you think CCIV, overall tech and SPACs will respond positively to jobs data? No, the jobs data is kind of mute. Not mute, moot. We talked about this yesterday, that if we got plus or minus 100K on jobs, we wouldn't really see much of a movement in the markets. That's roughly what we're seeing here. Nothing super jazzy, snazzy, whatever. It's yeah, kind of just meh. That's kind of what the jobs data is. Meh. So we'll see. All right, let's see here. There we go. Okay. So, all right, we're about, look at that. It's a psychological sell before hitting that line before the opening bell here. That's funny. All right, we've got Workhorse. Workhorse, folks, the line for Workhorse, just so you know, so you could see it here. Let's zoom out a little bit. It's 14 to 20. That's the line for Workhorse. And this is kind of what I've been paying attention to. And so I'm really, really, really looking for that push from $14 to $20. That's where we get our tendies. However, depending on the momentum we get to 20, if we get to 20, depending on the momentum we get to 20 with, we could shoot right through it. No guarantees, but that'll be very interesting. All right. Let's now jump on over to AMC here. All right. Yeah, AMC were some of my biggest option trades back in, sounds crazy to say it, but March and April of 2020. March and April of 2020, I would basically swing it from $3, $4 to $6 and $7. And it fluctuated between that frequently. All right, really getting that psychological pull away from the line here. It's possible. Yeah, the jobs data came out. Jobs data is just meh, 5.8% jobs. But it is possible that we end up seeing, what's it called here? A pull from. Yeah, it is possible that we end up getting a little bit of an AMC sell-off here as we go into the opening. Usually when we open on AMC, we get a sell down. No guarantees that's what's going to happen. But often then after, we get a pump. Also no guarantees. We have no idea. But historically, that is something that has happened. Yeah, we got the bell coming up in about a minute and 40 seconds. 30 seconds. I'm excited to see what happens, folks. This is it. This is going to be the move before the weekend. Tell you, we want to go into the weekend with some big tendies. Everybody wants a big tendy for the weekend. Texas James remembers those March and April trades. Yeah, you've been around for a while, man. All right, kind of nervous here. The anticipation builds. Pershing, by the way, wouldn't be surprised if this goes to $20. I don't know how people feel about that valuation on the on Universal Music. We'll see. Let's go DocuSign regularly to course members and on the channel. Always under 200, and it always seems to return over. Churchill Capital is almost up 4% here. Sundial, not really setting up for a big move right now. We'll see what happens. I gotta say, I'm a little nervous. I'm confident, but I'm nervous. You expect red going in. Expect a big fat red candlestick on AMC, and then we'll see a run here. We'll see. Okay, we're gonna audio listen to the bell here because I want to see the stick as it happens. Okay, so let's go and listen to the bell.
There was some discussion about the recalls. They've had about 3 recalls this week alone, not large numbers, but again, raising worries about quality control. And then the street is definitely paying attention, David, to the competition that's coming from GM and Ford. Citi goes to 73 on GM this morning, and JP Morgan puts a new street high on Ford as we got that F-150 Lightning not too long ago. Guys, there's the opening bell and the CNBC real-time exchange. Monday, David, is going to be a big day because you, Jim, and I will be back at the NYSE.
All right. So we got, okay, we're fighting it. We're fighting that line. Look at that. That's about to turn green. Look at that range. Oh, let's go. Hey. Oh, it happened sooner than expected. No way. We just went from negative to positive. Oh, come on. Break the line. This is it. This is where the volume's got to come in. Got to break that line. 17 million in volume so far. 19 million in volume so far. Not seeing that. I don't think we're going to get to that 50 million in volume that we had 2 days ago. But this is still very good volume. Come on, push it. There you go. Look at it. There we go. Push, break through it. Yes. Let's get a full break. Let's go. Full break. Come on. Full breakthrough. That's what we want. Within the next minute, we want a full breakthrough. Push it. Push it. Up. Mouse it up. Oh, man. All that negativity of the down 8% in pre-market is gone. Let's go. Look at it. 5% right now. Oh, man. Come on. We still got squeezing to do. Still have squeezing to do. Squeeze them. Come on. 5 point. It's okay. We're still doing good here. How's our volume? First minute was 20 mil. It's pretty good. We want to see a little more volume here in this next minute when this volume updates here. About 6.5% here. I don't think we're getting a lot of sell volume right here. I think the sell volume got absorbed yesterday. Look at the, who cares about the, there we go. Full break. Let's go. That is really good. That is a bullish sign here. Come on. Hold it. Woo! Ooh, 54. That's pretty good. How are the other ones doing? Let's sort by percentages here. Sens is giving up a little bit. DocuSign moving. Let's go. DocuSign. Yes. Still love DocuSign too. Churchill Capital. Trying to get to our, look at it bounce off the line. And people don't believe technicals. That line's been there for months. Come on, AMC. Let's get the full break. I want to see it. Go to the next minute. Next minute. We have about 15 seconds, and then we get to the next minute. We get our full break here on AMC. Come on. Let's go. Hold it. 3.5%, 4%. We're still, there we go. Okay, that's good. We got a full break. That's good. We expect some kind of up and down, some kind of volatility. That's to be expected. That's all right. But this is good. So we'll see how the moves play out today here. We are at 28.7% on Sens. DocuSign, 11%. Really good move on DocuSign. Sens actually pulling back a little bit here. ChargePoint maybe going to set up for something here. All right. Come on, AMC. Let's go. Yeah, we need the sound effects. What's Ford doing? I see some comments about Ford. Let's look at Ford. Ford's rotating to the downside, and we got C3 AI, Pershing, Okay. Actually, not too terribly much of a sell-off here on some of these things. Affirm, C3AI, these guys have just been getting smoked forever. All right. Come on, AMC. Where'd you go? Here you go, 3.66. Come on, let's go. We could do better than this. We did break above the line, which is very, very good. Churchill's bobbing around. A lot of volatility here. There we go. There we go. Nice. Get above that VWAP. Let's go. Stocks overall moving up, which is very nice. Somebody says they read that Canoe has a very high short interest. We covered them a couple days ago. Or was it yesterday morning? I don't remember. I could look really quick. But I don't want to look away from AMC. All right. Little bit of a red here. Hold that line. Let's see here. AMC right now sitting above the line. Tesla's coming back with 2%. It's good. Where's let's see, AMC rubber banding to that line again. It's telling us these lines. It's so interesting. Always. Stay above. Just stay above. It's fine. It's fine to have fluctuations, as long as we can keep it up. I wish Weeble would like adjust the left side a little bit. There we go. Down about 2% right now. We don't want to see a full breakthrough here. Draw the line higher. Oh man. Ay. Somebody says, oh, Hugo here says, I'm losing his respect for cheering an AMC play. What, I can't invest in a stock and be happy for it to go up? Get out of here. Get out of here. It's not like I'm sitting here going YOLO your whole portfolio. Y'all know exactly how much I have in it. So get out of here with the negativity. It looks like in a broader way, some stocks more broadly, it was a strong open, but a little bit more softness coming into the market here in the first few minutes. It's almost like the hedgies forgot to set their alarm clocks or something. Let's go ahead and look. We've got AMC here. Not a full break. We don't want to see that full break under the line here. Okay. Come on, AMC. Go the other way. All right. We'll see what happens here. All right, let's look at the other things for a moment here as well. Oh, let me look at Go EV quickly here. We'll get back to the 6. I just want to get the short interest for you on Go EV. That is a highly shorted one as well. Yes, that is correct. Go EV sitting at 30.05. Workhorse really being the one that's, let's see here. Workhorse again sitting at 49.66% short. Come on, AMC. Got a little bit of a break under the line here. Not super bullish here. A little soft on volume, I have to say. Who is Go EV? Go EV is Canoe. Canoe. It is concept cars, EVs, delivery cars, trying to go more commercial. Box van style, highly customizable. Anyway, yeah, AMC sitting right about 2% right now. A little volatile. Here we go. A little bit of a trying to recover. Trying to recover a little bit. Come on. Don't give us a full break under that line. Okay. Yeah, we'll see what happens here. Sitting around 2% right now. All right. What else we got here? There we go. Let's go green again. Let's pull back over that line. Come on, we can do it. We can do it. And Workhorse. Workhorse about 5% today. At 49.99% shorts, with the shorts having increased, I think the shorts loaded up more on Workhorse. I think they saw the gain on Workhorse and loaded up. That's what I think we got here. Was a load up in the short department. Very, very annoying. Yeah, well. All right, so that's Workhorse. We'll see if we can get back to that 14 line. It looks like we're also rubber banding around that 14 line. It's not a surprise. We really need a breakout above that, though. AMC doing, yeah, there we go. Come on back. Look at that rubber. It's just dancing. It's dancing. That's great. Dancing very nicely here. We want to see it. We want to see the breakout, though. That's what we want. Come on. Come on. All right. Sitting at that line, playing us right now. Sends went back from 27% to 32%. We've got DocuSign sitting at 10%. Churchill Capital trying to break through here. Get us a nice 5% gain. Zom starting to run. Roblox almost over 100. Maybe trying to set up for some kind of mover here. Or ChargePoint. ChargePoint not really doing much here. Let's see GME. No. Nope. Yeah, this is the minute chart, folks. This is the minute chart. AMC. Yeah, here's AMC. Now, what we can do is let's go ahead and pull. I'm going to pull the 5-minute here just because I want to see volume. Yeah, 30 mil. Okay, 30 mil, 8 mil in this 5-minute segment. It's okay. It's okay as long as we stay around that above 5 mil per 5 min. That's pretty good. And that could get us some sustained gains here. We are pushing again here. Very nice. Break above the line. Let's go. We're doing too much of this pussyfoot and dancing here, left and right. Let's get some work done. That's the same thing I must say anytime I got work to do. Just focus on the job, the mission at hand, and go to work. All right, let's go. So dancing a little bit. Upstart. Hey, here comes Upstart. Upstart's at 173. What? Oh my gosh. I mean, fundamentally, this is like $80 to $100 stock. But oh my gosh, to 173. Woo! When that dipped below 100, I'm like, I don't know. Every time it dips below 100, it seems to run back to 130, 140. I'll tell you, I was not expecting the thing to run to 173. Wow. Upstart. That's a good move. And here's Workhorse getting shorted again. Folks, 49.66% short. Huge amount of short here. Ay. AMC here. Good. Get the full break. Let's go. A lot of Upstart ads on my streams. You see one at least today. Oh, that's interesting. Advertising on my channel. That's fine. Keep doing it. Come on. Give us a full break. Come on. Tesla up 2.3% here. Lots of FUD with Tesla. There we go. Here it comes. That's good. We had our test. We did our dance. Now let's move. Same thing with you, Workhorse. Come on. Break above. Let's get some volume. Let's get some movement. This 49.66% short. That ain't no joker. Enphase up 3% today. Nice. It needs it. Sitting at 138 is a joke. It's pretty cheap. Come on. All right. Getting a little bit of a move to the upside again here. All right. Let's see what we got. Can I check the short interest on Open? One of the Chamath SPACs, eh? Yeah, we could do that. All right, AMC. I'm going to leave you for like 20 seconds. You better behave while I'm gone. Wait, what was the company? Open and IPOE. Let's say Open is only 6.74%. That's crazy. I thought Open Door would have been a lot higher. And SoFi, which used to be IPOE, is at 24.8% short. Actually had a little bit of a plummet. It was around 31% short. Shorts covered on that one. Yeah, shorts covered on that one. We haven't really seen massive short covering, though, on AMC yet. And, just a little bit. And we haven't seen the move on Workhorse. 49% short. Watch it keeps going. It's just, and keep this in mind, if you're investing in Workhorse, it could go down until it becomes a short squeeze target. It dances around this 14 line. It's literally, I mean, we drew this line yesterday, okay? I can't make this stuff up. I literally can't make this TA up. It happens live. You see it on a daily basis. The lines we draw just work. They work and they work and they work. It's scary. It's very scary. But anyway, once we break out of that, it could be good news again. AMC, come on. We need a solid, if we could just stay above the VWAP even over here. That's going to be very good. We want to get the bullish breakout here. So we did just have a volume pump here. So that was good. Got to about 2.3 million there in volume. Certainly want to see it stay above 1 million. Later in the day, though, it does go a little down. It does rotate to the downside a bit. All right, so see what happens here. It's a lot of people going for the call options on June 18th. See the open interest on those continues to go up. We also have an options monitor in the Bloomberg term. Gives us a little bit of an idea of where people are playing. Lots of 73s. Even though the higher options opened up, lots of 73s, you see. Yeah. There we go. Stable. Come on. Hold it, AMC. Don't even worry about what the orange line is. Just know you want to, if you're in, you want to see it above the orange, okay? Orange line. Orange line. Above line, good. Below line, not good. Oh, man. All right. Let's see here. All right, let's see here. Here we go. There we go. Now we're cooking with gas. Let's go. I look away for a second. I come back and you give an 8 up to 8% here. Oh my gosh. Come on. Come on. Hold it. Sitting at about 7.4%. Look at Upstart though. Upstart's moving too. I'm not trying to distract away from AMC here, but my gosh, I have to say I'm thoroughly impressed. And DocuSign, 13%. Woo! Wow. That's like what was that, a 20-point mover? 25-point mover. Wow. AMC sitting $54. Come on. Come on. Got some work to do here. Yeah, down 11% on PSTH. There's a lot of hope that went into this one. A little bit of buy the rumor, sell the news. Workhorse getting shorted more. They're reloading the shorts. It's all right. It's going to be 50% short soon. That's not good for the short sellers. All right. AMC, 6% to the upside. Sitting right around 54.90 right now. Let's go ahead and see what Fox has for Fox going on right now. Well, everyone's on commercial. A little bit of red. Stay above orange. That's what we want. All right, let's see what else we have here. Let's see. There we go. All right. Stable right here. About 5%. Take it. A little boring. I want to see a little bit more excitement. Especially since, let's see, Fox Biz on commercial, CNBC not doing anything. It's all commercial too. AMC about 4%, 3.8% here, 3.5-ish, playing around, playing with our emotions. All right, touching yellow here again, orange, yellow, probably orange. Yeah, but DocuSign's pulling back a little bit as well. There we go. Stay off that line. Dogecoin, 36 cents. Ethereum, 26.47. Bitcoin, 36.7. We've got touching that orange. We are sitting at Build-A-Bear, 1.85% to the downside. Coinbase about 1% to the downside. Wow, CrowdStrike went down after a triple beat yesterday. Walgreens been a little soft the last couple of weeks here. Pretty flat. Beats down, I suppose. Peloton. What is Peloton these days? 103. Oh, that gave up a little bit. It was sitting at 110 there for a while. Gave it up again. Gave up the gains. Tattoo 23. AMC breaking VWAP here. Volatility to be expected. Get the ups, get the downs, get them all. All right. Tesla is up about 2.5% here. All right, AMC. Come on. Where'd you go? Where'd you go, AMC? Okay, fine. I'll just sort by name again since Weeble wants to be funny. Still up right now. Still green. About 2% green right now. Looking at potentially having a little bit of a candle under the VWAP. They are talking about AMC here. Let's give them a listen really quick. Oops. Oh, they switched to commercial. Seriously? The second they show the AMC chart. All right. What else do we have? Let's go ahead and give Fox a brief tune in here. Let's see what we got.
Added in the month of May. Labour Secretary Marty Walsh joins me now. Mr. Secretary, thank you very much for joining us this morning. Good morning to you. Look, there's over 500,000 jobs added in May. Why do we need $300 a week unemployment benefits all the way through till mid-September?
I mean, because we still have people out of work. We still have people looking for work. We have people that need to put food on the table and a roof over their head. And we still need to continue to move forward here. I mean, I think this report showed that the unemployment benefit is not necessarily keeping people out of the workforce. What it's doing is supporting families that are still out of work.
All right, let's go ahead and pull back. Let's go back to our sticks over here. Yeah, AMC sitting about now down about 2%. So we're getting a little bit of that bob around here. It's all right. Well, let's see here. Let's see what else we got going on here. Yeah, workhorse a little soft right now. I'm just shocked with how short it is, but that'll U-turn. Tends to bob around that $14 level. Here we go. AMC trying to push back up to get above the, not get a full break here again, but it's been doing this. Look at this. It's the same pattern. It's just the same thing. It's just boring. Boring pattern today. That's what we're gonna call it. The Elon Musk boring pattern. It's like a tunnel, straight, but it's boring. Woo. Yeah, keep in mind that AMC is going to vote on issuing new shares, not selling new shares, issuing up to 25 million new shares. That'll work out to about a 5% dilution, but the shares won't actually be sold until 2022. Why is that important? It's important because you don't want more liquidity when you're waiting for a short squeeze. The more liquidity they provide the market, the harder it is to get a squeeze. And so they're not providing any more liquidity right now, which is good. Let's go pull up the stocks here. Rotating up again. Jeez, this is like it's going to bounce off our line again over here. It's that rubber band. It's powerful. Playing that line today. Tesla, 2.3. A little bit of give back after a disaster of yesterday. Oh, man. The amount of FUD Tesla gets is crazy. It's so incredible. All right. Watching AMC carefully here, but let's listen to the CNBC for a moment.
And he joins us with some details, Robert.
And David, you know I love talking about your favorite part of the tax code. It's that $10,000 cap on state and local tax deductions because it is, in fact, changing the map of American wealth. A study by Joseph Briggs at Goldman Sachs found that the SALT cap created an effective tax hike of over 4 percentage points for high earners in New York and California, and up to 12 percentage points compared to states with no income taxes. That larger gap is...
All right, boring. We'll stick to the charts right now. Bobbing around zero here. Flat line today. It's doing a bob. Bob up, bob down. Woo. All right. Where's our big run? Our big boy run. AMC should offer free Planet of the Apes movie on repeat. Yeah, these lines are too magnetic. That's exactly right. Flight of wealth. What, people leaving California? That wouldn't surprise me.
It says we expect the tax hikes will meaningfully increase immigration from New York, which will in turn reduce the almost $3 billion in revenue that they had projected. Goldman not expecting a SALT repeal, but says a possible increase in the SALT cap, maybe to $50,000, is more likely. That would still do little to stem the tide of these high earners to places like Florida and Texas. Guys?
Yeah, that exodus is one that continues, Robert. And of course, then it goes to the larger issue of whether companies are going to have a better time recruiting people in those states as a result of the fact that people are moving there. And we'll see where it all ends up. But I guess the key question, and the one that's been debated for years, is by increasing taxes, do you drive people out, and therefore it's revenue neutral? So what was the point of it to begin with?
Yep.
Exactly. And that was the most startling thing to me about this. Obviously, we knew anecdotally, you and I both know a lot of wealthy people left to Florida. But
all right, we're going to pull off this talk. Bobbing around this line like crazy here. Like, let's go. Let's just move the line up. Let's get a new line. Come on. Come on. We've got get a little sleepy here because it's boring. Give us some action. Up. That's what we want. When do we want it? Now. Oh, yeah. All right. Keep an eye on this. Bobbing around that line. Workhorse. Bleeding a little bit under that 42. I'm sorry. Bleeding a little bit under that 14. 14. 50. Oh, basically 50% short. Blows my mind. All right. What else? So how are other things moving here? Sen's doing well. DocuSign doing well. But Sen's pretty much had all these gains, within 5 minutes of the close yesterday. So it really hasn't done anything. DocuSign has been moving intraday here. DocuSign's been doing pretty well. Come on, AMC. What are you doing? Wrong way. Up. Oh, look at the volume here on AMC. It's 1337. Come on. If that's not a good sign, I don't know what is. You get a volume stick literally at 1337. That gets me excited. That's fun. Come on. Here we go. We need this where's the volume? Where are the buyers? I need more buyers. It is also usually it's a higher volume day on options expiration day. It's lead. Let's go. Yeah. So yeah, again, usually you do see that higher volume on options expiration day. So you could have some reshuffling here. There we go. Come on, AMC. Let's get a full break. Let's take it one step at a time. Full break over the line. Then we'll go for the full break over the VWAP. And we're just going to go to the moon. Okay. Do we draw the moon? We haven't really had the moon here. Weeble. There we go. Okay, Weeble's got to cooperate. So where are we going today? Where do we want to go today? How high? We need to draw another line. Well, let's break out of this first. That will compromise. Let's get above the VWAP first. Orange line. You don't know what that is. Just orange line. We're gonna focus on the orange line. Break that orange line. I mean, this is scary. I mean, we literally just play this line like a fiddle. And this line's been here for 3 days. And people are like, no, Kevin, technical analysis isn't real. Really? You're telling me a line I drew 3 days ago that looks like this isn't real? I mean, I did just spread out. There. See? Look how perfect the line is. Whatever. All right. Still dancing between these figures here. All right. What else you got? Is there anything else going on? A little quiet here. Oh. Dancing between those lines. Fox Business is on commercial. CNBC is on commercial. Boring. Everything's boring. Let's see if we got Bloomberg maybe. Let's pull up Bloomberg. Oh, y'all started changing the poll a little bit, did ya? We had more of you vote on the poll and it changed it a little bit. How could you? Yeah, like another 800 of you voted on the poll. There you go. Look at that. You moved it. You moved it from 44.5% and 55.5% to now 57.4 and 42.6 for inflation expectations. Actually, more of you joining the side of no inflation. Y'all messing with my charts. All right. Like, with these kind of moves in AMC, I'm going to have to make myself another cup of coffees. Another couple cups of coffee. That's it. Oh, man. All right. What else here? Just stuck. Do something. It's like you're what's the meme where you're poking the dog? All right. Let's look at some other things for a while here. Like DocuSign. Oh, now my charts aren't loading anymore. Hey, by the way, remember, if you want your charts not to load, get 2 free stocks with Webull. Go to metkevin.com/Webull. You could use this app as well. Go to metkevin.com/Webull, deposit $100, and when you deposit $100, you will get yourself 2 free stocks worth up to $1,850. And if you search Meet Kevin in the App Store, you'll never miss a notification again anytime I go live or have a new video. It's all about getting you that financial information ASAP. We don't want to wait for YouTube. We want our insights now. Thank you, by the way. I didn't even ask people to review it, but thank you for the people who reviewed it in the App Store. Very nice of you. Down 3% right now on AMC. AMC is down. Bobbing around 2% right now. About to have a full break below our $50 line here. Come on. And yeah, Workhorse is not showing the love today. Workhorse is down lots of money. Lots of money today. Where's our short squeeze?
We're going to start with a work from home favorite, DocuSign.
This is actually the time where it starts making sense to buy work. But the reason for that is you get cheap options on a red day, and it's 49 point, what did we say? 49.66% short. It's a lot.
Compared to the same quarter a year ago, those shares are up about 3.5%. And finally, another retailer we continue to keep an eye on, Bed Bath & Beyond, with B of A moving to a no rating on that name, believing the meme stock is no longer trading on fundamentals. B of A also dropping coverage on GameStop for similar reasons. Carl.
Morgan, speaking of which, our Seema Modi has a lot more on AMC and that crazy week. Hey, Seema.
Hey, Carl. Good morning. An incredible run in shares of AMC this week, putting its market cap at nearly $27 billion. Now, that makes the theater chain larger than 40% of all companies in the S&P 500, including big names like United Airlines, Kellogg, and Clorox. A number of stock sales announced this week, roughly 20 million shares in 2 separate deals, one involving Mudbrick Capital, further diluting existing shareholders, which CEO Adam Aron continues to defend on Twitter and in his conversation last night with YouTube host Trey Collins.
Hey.
If you arm us with
what's
the
up,
tool
man? We had Trey on the channel.
to go find value-creating opportunities for AMC shareholders, we can do that. If we're not armed with this tool, then you're tying our hands behind our back, and you'll make it just that much harder for us to land some of these attractive opportunities that benefit us all.
Just to put these stock sales into perspective, from January to May, AMC has raised about $1.6 billion. Short interest, something we've been talking about this week in AMC, it's risen actually to 21% from around 18 or 19% in previous sessions. So short interest in AMC.
Everybody's got different data on this. Ortex is like 17 something. S3.
5 million shares have exchanged hands in the 30 minutes in trade here. And just to put that into context, The volume on this day last year was just around 8 million shares for the entire session. And a lot of talk too, guys, about the massive call option volume as well in AMC.
Yeah,
Nice. Take a peek at this. I'm going to pull off this here for a moment. You've got Tesla all of a sudden running a little bit here. Nice looking chart here on Tesla. Tesla up about 3.8% right now. Wow. Upstart 9.6%. Jeez. Roblox. They got to be over 100. Yep, 101. Roblox sitting at 101. Really incredible. Yeah, what do you see on Ortex? So the workhorse, I'll show you. Workhorse short is, here we go. As a percentage of float, I'll show you. Screenshot. It's an S3 data. There you go. S3 data, putting the short interest as a percentage of float on Workhorse at 49.66% and going up too. Moving up. All right. It's had some wonderful gains, but yeah, giving up 10% today is an ouchies. No, well. We've got, where's AMC? Tesla. Yeah, Tesla getting back to about 4%. Not moving terribly much right now. AMC is just rubber banding. It's just sitting around here, rubber banding. Yeah, 1.8-ish. Bobbing. Little boring. Not doing too much. All right. Still stuck. Yeah. Workhorse here. Yeah, Workhorse suffering right now. So is Build-A-Bear. Yeah, a lot of the movers just not doing great today. Not doing great today. Although Eyes is doing well. Where's Ears? Tesla, Churchill, got the EVs kind of making a little bit of a comeback here. Enphase, 2.89. Neo. It's interesting Tesla's running after Elon Musk talks about breaking up with Bitcoin. The XPI 2%. It's a little larger part of the portfolio is up today. But the momentum movers not doing no momentum today. Well, that doesn't mean it won't come. Sometimes on AMC you get these incredible out of nowhere runs. Yeah, but right now we're stuck looking at the line, staring at the line, going, when's it gonna do something? How's Palantir doing? Plug Power, nice, 6.56%. Plug Power is doing nice. And DocuSign still sitting around that 1372, very nice. Palantir 1.97. Snowflake 224. Snowflake's 243 now. Shift 761. Tesla almost back to 600. It's about a 4% gain today. Crazy fluctuations. All right. AMC still bobbing below the line here now. 3%. Cleveland Mester. Oh, let's listen to her for a moment. Hold on a sec.
Participation coming back
from the Fed.
To put some numbers on what you were just talking about, I was just doing some calculations. We are down 7.6 million jobs from February and 3.5 million when it comes to the labor force. Do you want to see all of that come back, every last job, before you change policy?
So I'm not looking at it that way. For me, substantial further progress doesn't necessarily mean getting back to all the levels. And there's going to be some that probably won't come back. As you know, the number of people who left the labor force through retirement was higher during this pandemic recession recovery than in previous recession recoveries. And typically, and of course, nothing's typical about this cycle, but typically when people retire, they don't come back into the labor force. So I've been focusing on prime age labor force participation because I'm not sure we'll see the same level of overall labor force participation that we had in February. So again, it depends on what indicator you're looking at. But bottom line, I would like to see further progress than where we are right now.
Okay.
Where do you come down on this issue of just how fast the recovery should be, President Mester? Some people were thinking that the numbers was certainly the street's estimate was higher. There were higher numbers out there. Do you believe that job growth is being constrained at this moment by policy, specifically the issue of unemployment benefits and the extra benefits being paid by the federal government?
I think there's several factors that are affecting labor supply. One of them, of course, is, we're really, getting vaccinations more deployed, but there's still more way to go on that. And I think health concerns are affecting people's choices to enter the labor market or go back into the labor market. I think the childcare issues, and I know there's various views on how much that's affected things, but the Fed surveys and talking to our contacts say those childcare issues did loom large and have kept people out of the labor force because they have to be home to take care of their kids, especially when schools were closed. As schools reopen, I think those people who had to sit things out come back. But the question is, how did the unemployment benefits, extended unemployment? I think what happened was people were making decisions based on those other factors, but they had the wherewithal to make those choices because of the extended unemployment benefits. So you could actually make a choice of sitting things out because of the support you had. But I'm not sure that was the driving force. I think these other factors were really more important in terms of labor force participation, whether to move back into the labor force, stay out, retrain.
One response of employers to the difficulty of finding workers has been to raise wages. We saw a 0.5 point increase in wages in the payroll report this morning, 1.7% increase in unit labor costs in the productivity numbers yesterday. To what extent, I mean, everybody wants to see wages go up. It's a good thing. But to what extent do you worry as a central banker that wages go up, that causes prices to go up, and you create an inflationary spiral?
Yeah. So at this point, I don't think we're anywhere near there. I mean, the dynamics in underlying inflation are very different than in the past. And we're just beginning to see some wages go up. I mean, one of our Beige Book contacts told us that, who is a workforce development person, that they're not even taking orders from firms that aren't paying at least $13 an hour because he can't find workers to fill those jobs. So this increase in wages is definitely happening as the supply of workers is constrained. But it's not feeding into underlying inflation yet. And, that's what we're focused on at the Fed. I'm looking at measures like the Cleveland Fed's median CPI measure. It ticked up 1/10, but it's basically at 2%. So those are the kinds of longer run, trend inflation numbers that I look at. I don't think we're in anywhere close to wages going up. It gets embedded in, further price increases. It's something I'm watching because there are mechanisms through which, if prices continue to go up and wages go up, it might feed into inflation expectations. Another thing I'm very carefully watching, and then feed itself into inflation. But I don't see, that's not my baseline outlook that that's going to happen.
President Mester, I have a hard time keeping track on what you're thinking about, or talking about at the Federal Reserve, or thinking about talking about. But I want to ask you a direct question. Is it time to start talking about reducing the asset purchases of the Federal Reserve?
So I'm a long-term planner, Steve. I like to think about things well in advance and start thinking about. So I've been thinking about, as soon as we put on some of those asset purchases programs, I was already thinking about, okay, what's the end game going to look like? I didn't know when that would be, but, I've been thinking about it all along. I think, we want to be very deliberately patient here because, this was a huge, huge shock to the economy. We see now we're coming back, but again, it's easy to shut down an economy. It's much harder to have it come back. I've been very pleased with the resiliency of the economy, and we're going to guide our policy decisions based on what we've told you.
I mean, this is, a lot of this is relatively them just kind of digging in again, going, look, we still got a lot of work to do. We're not going to go back to the number we had previously, but I mean, not expecting that inflation to come again, just that continued reiteration over and over and over again.
Having a forecast, right? We want to see it in the data. So, we're going to get to the point where the economy has come back enough, right? There has been substantial further progress, and we're going to want to change our policy stance on asset purchases And then later on, if things go, according to what we're hoping, right, on the funds rate. But again, right, those things can take time. And I think we've been deliberately patient, and I think that's been the right strategy.
President Mester, it's Morgan. That being said, I mean, given the growth that we have seen in money supply, all of the liquidity that is in the market right now, has the Fed had a hand in spurring this meme stock trading frenzy that we've been talking about for days now on CNBC, or other pockets of what is arguably irrational exuberance that is manifesting in the financial markets?
I mean, there's volatility in financial markets. Some of the valuations look higher than can be supported on regular fundamentals. I'll grant you that. I don't think that it's Fed policy that's driving that. And I think one of the things that's really important in times, where there is volatility, is to look at making sure that the markets are resilient, the underlying fundamentals in banking, that they have the wherewithal and they're well capitalized. And we've been focusing on that throughout the pandemic, and I think to good avail. There's more work to do on that in terms of the Treasury market, as you know, had issues at the very start of the pandemic, and those longer run issues in terms of even the non-financial sector, hedge funds, et cetera. We're looking at that. And of course, the Board of Governors, Vice Chair for Supervision, Randy Quayles, is looking at those things. But, I think that we're not driving those outcomes. I think that's just a case of people, their risk preferences have gone up as things improved in the economy. Our job is to just make sure that the fundamentals in the markets are sound.
Yeah, and I understand that. You have this legislated mandate, dual mandate, price stability, full employment, sustaining those.
All right, kind of more of the same here. So let's take a peek at, let's look at the sticks here again. So we've got some things kind of rotating down here, maybe sort of the broader market. Let's see here. We've got, okay. We've got, let's sort by price here. We've got Sen softening a little bit, since it's open around 32% up, sitting about 26.5 right now. Upstart 12.82, very well here. Roblox just killing it here, over 100 now. It's 101, almost 102, absolutely incredible. Tesla 4%, very powerful. Very, very good move here. We've got Workhorse getting killed by the shorts right now. We've got SoFi down 7%. Wow. Both of these highly shorted. So, SoFi nowhere near as highly shorted as Workhorse, but Workhorse, this thing's almost 50% short. It's incredible. We've got Macy's down 3.3, Rite Aid down 3.5. Rite Aid did have a good run here. Here's AMC really struggling. It struggled to hold above VWAP. It struggled now to hold the line. And so now we've kind of bobbing around here a little bit. At least right now, we want to see if we can start getting a bounce off over here at AMC. It does look like broader market did do a little bit of a pullback here in the last 5-10 minutes here. Well, nope, maybe just the particular momentum stocks. So we've seen quite a few of them sell that because the S&P doesn't show that. So go AMC again here. Let's see. I'm gonna watch this closely here. Yeah, there we go. Okay, good. So get a nice bounce over here. Be nice to see it run again. Volume has dropped in about the last 5 minutes here. So volume slowing down a little bit. And this is on options day too. So you would expect a little bit more consistent volume, but we'll see what happens here. All right, folks, we got to go to, was there a plummet in the 10-year after the jobs report? Wouldn't really surprise me. 10-year Treasury. Let's grab it really quick. All right. Yeah, look at that. That's good. See, it's kind of what we mentioned is on a down, you tend to see a little bit of an up in some of the stocks that sell off on inflationary fears. When you see the 10-year Treasury go down, you tend to see those companies that usually sell off go up. So this might be a contributing reason for why, for example, Tesla is up. What it's up today. Yeah, AMC at about 4% to the downside here. And Tesla sitting about 4% to the upside today. Very interesting. Yeah, you get assigned at the close of business day, not at the beginning. All right, folks. let's keep an eye on this. We'll see what happens. If I make any changes, I'll go live. So make sure you download the Meet Kevin app so you get the notification. So that way, if I make any changes with the options, you will know about them today. But for now, I'm heading over to the course member stream. Thanks for being here. Goodbye.